Good day everyone, welcome to Capital FSN Academy. Now, this is the continuation of support and resistance. As we told us that before we continue, we need to kind of tell us some things about psychology, and we have done it. If you have not watched it, please go to our previous video and watch psychology so that you understand how the market moves, how it affects you emotionally, and some things you need to pay attention to. So now let's continue. Like in the previous videos, I taught us about support and resistance as we started. If you have not watched it, go and watch it. We have like 2 videos about it now. Now remember I told us that we go to daily time frame. After a daily time frame, this Ethereum. Now we analyze Ethereum using it to explain something. Now if you go to a daily time frame, you zoom in your chart. Then when you zoom in your chart, excuse me, when you zoom in your chart, you are zooming in your chart so that you'll be able to see the previous what has happened before. You understand? So when you zoom it in, you will now mark out the levels, the important level. Remember I always say important level. So let's assume you're marking here, putting here as our support zone, putting here as our nearest support zone currently. That's where the market is reacting from currently. So okay, that is the most important levels that we have currently. So we have done what we need to do on a daily time frame. So we'll be moving into 4 hours time frame. That is how to mark out your support and resistance. Now, as I have explained, a support can be turned to a resistance, while a resistance can be turned to a support. Now let me explain it with this one. Now previously, if you look at this market at this angle, you will see that this area, the market, this line was serving as a support zone. Yes, so serving as a support zone, the market hit its reverse rejection and hit our resistance zone, come back and hit a C rejection until the market now break it here. Now what's brought about break and retest? Now after the market break it here, it came back and retested it, and retesting it, if you go to a lower time frame, this is a bearish flag. We have not done pattern, so in some videos we'll make a video about it. So now after testing it, it dumped, but it didn't reach our support zone. Then it came back and broke it. Then after breaking it, the market dumped back and retested it. Remember, the market have not retested it all this while, retested it here. So now as you are watching this video, as the market have retested it, what is first thing coming into your head? The first thing is a zoom off to this resistance zone. That is first thing. This 4 hours time frame, a zoom off to it. But that does not mean the market will just move straightly. Remember, we have retailers, retail resistance at these zones. So what are we going to do? We kind of, okay, for those of you that doesn't know how to mark out the trend line, now looking at this market here, now you can see that as it was going down, it was making a step. That is a downtrend. Then you put a trend here and mark it to mark out the trend. So this is how it is, how the market made the trend, how it is. Then we don't need it. So now what we need now is that we have seen what we are expecting. We are seeing what we are expecting on the market. We have seen what we are expecting. We are expecting a buy from daily 4 hours to daily from 4 hours to daily time frame. The market is expecting for a more buy, but it will not just, we can't just jump into the market, because if you are jumping here, remember your stop loss should be the previous low, which is this zone. And if you calculate the risk, now how to calculate the risk, you can just come in here and collect price range, select price range, tag it from the current price and move it up downward to this level. This is 11. If you are trading crypto, if you are trading exchange, crypto exchange, this 11 means 11 points. We are seeing 11.43%. It means that if you are using 10x leverage, 11.43 means 11.43 times 10x. That 10x you are using 10 times. You understand? 10 times both your amount and your this. So the risk is now 10 times this. If you are using 100s, it should be 100 times 11.43. You understand? That is how it is being done. Now Let's now go down to 4 hours, 2 hours time frame to see if we can see a perfect zone for us to enter the market. So now on 2 hours time frame, we can see clearly on the chart that the market actually broke this zone. We can now say that, oh, the market on a lower time frame, coming to a lower time frame, the market broke a structure. That means for it to break this structure, we have a high possibility that this market might go down path before moving up as we expect. So this is the, okay, let me mark it this way. This is the structure the markets have broken. This is the structure the market broke, and we can see as he break it, what are we expecting? We are expecting for the market to come back. See, now there is something I always teach people. Now if you look at this market here, you can see that the market had more reactions on this zone. This is a fake breakout. That means this is where the resistance lies. Then the market faked out and came back, retested, tried to it retested actually. The market retested, then dump, then it's coming back to that zone. That means that if we are buying to this zone. Then if you break this zone, we are now going higher. Now going higher, see your daily time frame resistance zone. You understand? So now we are now moving to 45 minutes time frame. What are we looking for? We are looking for, oh, should we sell or we should buy? Now if you're looking at this market currently, you can now say, using your support and resistance, you can now see that, oh, this market had a lot of reactions here. Remember I told you liquidity, this is a liquidity, this is a liquidity, this is a liquidity, this is a liquidity, and I told you liquidity means money, and what is moving the market? Money. That means whatever that made the market to reverse is money that made it to reverse. So at this zone, money started leaving the market started selling. Then at this zone, money started coming into the market started coming up. Then at this zone, money started leaving the market started going down, and same thing continuously. You understand? So at this zone now, what are we going to do? Now when the market is ranging, there is different ways a market can range. We have rising wage, we have falling wage, we have a normal wage or a normal range in a market. So first we need to mark out how is the market ranging. Now before you make a conclusion on the direction you want to flow, now let me tell you, when you will be learning, when we will be treating patterns, you will discover that when the market is moving from a support or a resistance, from a zone, let me just use the term zone. If it is moving from a zone and it has rejected that zone, if you reject that zone and have a massive momentum, after that momentum is started ranging, that ranging can signify a continuation, high possibility of a continuation. Now what is happening? The market came to this zone, a support zone, and rejected. We have a massive pull. Then after the pull, the market started ranging. This range signals a high possibility for a continuation in the market. So now with this knowledge, now you have known, what will you do? Firstly, what I will do, if I'm the one analyzing it or the one to take the trade, I'll firstly mark out the level that the markets have respected. Now this is what the markets have made before. Then I'll mark out the other parts, how the markets have been moving again. So this is the way this market has been moving. So it has been moving inside this channel on 45 minutes time frame. It has been moving inside this channel. Now on this channel, now what is next thing for us to do? We will go back to our charts, candlestick patterns, and now look at, okay, should we see a rejection on this level for a sell? But our chart patterns says that when we are having a range after a massive rejection, then it can signal a, a a continuation. That means we'll be looking at where are the possible support zones at this level. Remember, when you are trading a channel, they will always tell you, I firstly wait for the market to break a path. Now this one I'm explaining is just for you to detect the possible place that the market might break. So what I will do currently is that I will first of all make sure that wherever I'm placing my order, my stop loss should be below this zone. Now because of this precious candle here, my stop loss should be below it, and if it is not below it, I should be careful on the money I am putting into the market. So what am I going to do? I can go backward to know if there is a precious candle I can see to justify my entry. I am looking for an area where I can justify my entry, and I have not seen currently, but I am looking at this level. You can see this level that yes, it is looking this a precious candle in between. So now I am now marking out that candle. Now I will be marking out the bearish candle there, marking it out as my zone for a buy. I'll be marking it out as my zone for a buy. I will go back to my trend line. Because of my trend line, I will now look at previously how the trend line have reacted on this zone. I just marked that. I'll mark it this way, and I'll see, oh, we had a reaction below it. I will now bring my trend line on that reaction. Now you can see that my chart, my support is now currently reacting exactly on the support where the market actually had a perfect rejection. Now then I will now be waiting for what am I now waiting for now? Currently I'll be waiting for a market to reject this way. This is what I will be waiting for in the market. A push to a possible break, a dump, then a continuation. Then I now have to calculate risk. Now if I'm to go below, place my stop loss below the zone I'm supposed to place stop loss, how much am I risking? I'm risking, if I'm using 10x, this is 3.39. If I'm using 10x, that means it's 3.9%. If I'm using 20x, as we all know, it's 67.8%. You understand? So that is just how you calculate it. Then that means if I must place my stop loss below this zone, I can use 5x. If I use 5x, it will be 3.9 divided by 2. I'll be gaining 3 divided by 2 is 1.5. So I'll be gaining like 17% as my risk, and it will be okay. Imagine entering a trade with $1,000 and 17% will just cut you $170. So if you now hit your take profit, what is our take profit? Let's calculate risk ratio. So now this is this is 12.7. So that means if this market pick me and hit my take profit and I'm using 10s, I am gaining 127%. You can see that the reward is very high. It is worth it to take the risk. So that is why I'll be going in for a buy on Ethereum. Now I believe that on this video you can just see how I kind of join different knowledge using chart patterns, using candlesticks. When I was talking about rejection, I will use candlestick. That is the candlestick I used to mark out this level. Then using your support and resistance. Now to place my stop loss, I can now say, okay, let me place my stop loss at 2 instead of going to this level. Then I will just be watching. When the market triggers, I will be watching it for this level to know what is happening. You understand? So I will just minimize the risk I'm taking. Then another thing I have seen that justify our action is that this is a level that the market just broke. It broke it came back, retested this zone. Now let's see where this market, let me mark out this zone and see how the market respected it. Marking out, remember that this zone exactly I'm marking out was a break of structure previously. Now we are now watching after the market broke above. You can see the market respected that zone, respected it multiple times. Now my stop loss is below it, so I can just say that this my stop loss is on a perfect zone. So I'll be waiting for a buy. In our next video I will give us results on how the markets went. This is 45 minutes time frame. So now for those of you that want to, I want a sniper entry. If you want a sniper entry, you can now move from this 45 minutes to maybe 15 minutes time frame and now rewatch the market. Okay, watch the zones you placed your order. You can look at it now. You can decide to adjust, because the reason I can say on 15 minutes time frame we are seeing a precious candle below. See this candle here, we are seeing it. So you can decide to adjust your entry. But if you adjust it, see now, the entry will be what? If I adjust it, your own entry will be 2403. while my own is 2411. You see, the difference is not much, so I'll still go on with mine. So thank you so much, guys, for um, subscribing. Make sure you subscribe, share with your friends, and you can join our academy if you want. We have a general group where everybody discuss about trading. Thank you so much, guys. Have a nice day.